The Federal Reserve is widely expected to leave interest rates unchanged today.
Although prices have steadily declined over the past 2 years, inflation still remains above the central bank's target rate. The last time the Fed changed interest rates was July 2023, but who's counting? Experts predict they will drop at some point this year, but Chairman Jerome Powell says more time is needed for the economy to cool off. We want to bring in CBS News senior business and technology correspondent Jo Ling Kent to break this all down for us. Nice to see you, Jo Ling. Let's start with the fact that the central bank has not touched interest rates since this past summer. What is the strategy behind this?
The strategy is simple. It's about a 2% target inflation rate. And that is what Chairman Jerome Powell and the entire FOMC is looking for right now, a meaningful decline down to 2%. Instead, what you're feeling and what they're seeing is a bumpy ride in terms of inflation. We've been basically stuck at 3%. February inflation was 3.2%. It hasn't come down in a meaningful way, despite the fact that other elements of the economy are doing great when it comes to the jobs report, unemployment, other factors. They're also keeping an eye on wholesale prices. It's called PPI, producer prices. And that is something that came in hotter than expected last week. That was driven by food and gas prices. So if you're feeling like you're paying more, you are. Prices, even though they've come down meaningfully since the peak of more than 9% a couple of years ago, you're still paying more at the pump. In fact, I was just looking at gas prices, which is a real big driver of inflation right now. That current average gallon of regular is $3.52 a gallon. Now, you compare that to just a month ago, it was $3.28 a gallon. So wow. These are the things that you're feeling, and you might be thinking, wait a second, I thought inflation was coming down. Things still feel so expensive. That's why some of these big monthly expenses, these regular expenses, continue to hit budgets pretty hard.
And Jo Ling, gas obviously is one of those things that's more volatile in terms of pricing. But as you mentioned, the inflation rate for the last several months has just been sort of hovering in the low 3%. I know that the Fed wants to get it to 2%, but they've been so stubborn. Is there any sense that the Fed might back off on their goal, or are they going to potentially take more drastic measures to try and get to that 2% target rate?
Well, it seems like keeping interest rates where they are is the measure that the Fed is willing to take. They've been so consistent. Fed Chair Jerome Powell has been very, very consistent about what he has said about getting to a meaningful 2% target rate in general. And so, we could see, we don't expect the rate cut to happen today. We've known that for a long time. The question is, what really happens in this press conference, in this press release, in terms of the forecast, because a lot of economists are betting on a June rate cut for rates to come down. The other factor here, of course, is politics. The Federal Reserve has always tried to stay far away from politics, staying apolitical as an entity. And so economists are telling me, look, June might be the last chance for them to cut rates without appearing political as we head closer to the general election come November. So we'll see what happens, but we do not expect any rate changes today. That is something we've known for a long time. The question is, which words are going to be said? What's going to be dissected to indicate what's going to happen come June and perhaps even May?
Oh, we know you will be following all of it. Big day for you. Jo Ling Kent, thank you.
Thanks.